Let's focus on markets and bring on board our experts. Joining in on the show this evening, we've got Canara, HSBC, OBC Life Insurance's Ritu Arora, and Pramerica Mutual Funds, Vijay Mantri is here with us as well. Both of you, many thanks for taking time out for us this evening here. Ritu, let me begin by asking you, what's your call on, market valuations right now? Of course, a lot hinges on the election, but we've also got earnings that kick off as early as next week. Do you see a possibility of upgrade there once the Q4 scorecard is out of the way?
India's trading 15 times FY15, which is a reasonable valuation for Indian economy, given the fractured fundamentals at this point in time. Q4 earning estimate is around 12%, and even for next year, FY15, I would think it would be about 12 to 14%. Given that earnings, I would think 15 times is a reasonable valuation. There could be a little upside, but do not see a runaway rally purely based on fundamentals. Having said that, FII inflows have been steady and sturdy, and if that continues, we might continue to see some momentum in the market, but I do not see, just based on valuations, a big rally.
Vijay, Ritu believes that from current levels, market may have little upside, but what's on your radar? What kind of range are we talking about on the index taken 4 to 6 weeks from here?
See, very difficult to take a call, but what we are seeing is that the trend or the range in which market trade, that range showing continuous upward, and that is a sign of a bull market. If you see 6 months or 1 year back, the trend was 15,200 to 5,200 to 5,800, then 5,500 to 6,000. Now nobody's talking about 6,000. So what we're talking about 6,200 to 6,700 or 6,400 to 6,700. So I do not think that the market is going to go down more than 5 to 6% from these levels. If events keep happening one after another, if all events come at one time, then the market may go down a little more than that, but it will be very temporary in nature. At the same time, suppose the result of the election comes and the results are much more than what market is expecting, then on that week, perhaps the market may go to a 7,000 level, but I think it will pull back because right now the market at a reasonable valuation, and until and unless the challenges which Indian economy is facing, that will take some time to get sorted out. It is not going to happen in a hurry, and in expectation of the new government and a strong government, market is already priced in all the upside from a current fundamental perspective. So one need to wait for a couple of more quarters to see what kind of budget the next government is going to present, who is going to head which kind of ministry, and every individual minister would have their own take on economy. And at the same time, when the economy goes through this kind of transformation, there will be some casualty. Now, which company or which sector will face the casualty, we don't know. So one need to be a little cautious about cyclical in this kind of environment.
We need to be cautious on cyclicals. But Ritu, how are you really gauging optimism in the market right now? Do you think it is close to peaking out, or do you expect a little more up move in the medium term?
Stars have been aligned for India and are aligning, which is positive. I see improvements in the fundamental economics. Of course, with the CAD position improving, currency has appreciated. It has a positive impact on fiscal deficit. So the crude has remained high. Because rupees appreciated, the deficit impact is controlled. So there are fundamental factors like inflation as well, which are playing out well. We see correction in inflation. These are adding to the positive momentum building around a leadership change, a defined, a clear majority government with governance on the agenda. I think it's just coming together of many factors. If we do not see the political fallout as expected by the market, I would think there would be disappointment and we might see some correction. But the positives have largely been built in, and we are assuming that all these are given and fundamentals as well as governance is going to continue to improve.
Vijay, we are seeing headwinds for the IT space. That was really down today in trade. You've got management commentary that seems pretty cautious. The rupee has appreciated a fair bit. If you were to just look at how things will pan out over the next 3 months, do you believe that IT as a group could possibly underperform equities?
India's economic growth has come down from 8% to 5%, but still 5% is better than many countries in the world. Similarly, Indian IT companies may grow a little slower, but at least there's a growth, at least there's a cash profit, at least there's no debt on the balance sheet and no challenge on the corporate governance. So in spite of all the challenges, I think they will continue to grow. There could be some valuation concern on one or two companies, but by and large, we believe that IT company will continue to do well. The market, which was overowning it, may come and sell part of it, and that is the reason that prices may come down. But if you look at next couple of quarters, we believe that our Indian IT company will continue to deliver good performance as far as their fundamentals are concerned, and as well as that will get reflected in the stock prices. As far as currency is concerned, our call is that what has happened is that because the step taken by RBI, a lot of money has come in Indian market, and that is the reason the currency has appreciated. But we do not think the long-term trend on Indian currency was of appreciation, because what has happened is completely finance-driven flows. We haven't seen the manufacturing-driven flow. Till the time the trade balance remain against India, I do not think rupee have a long-term trend of appreciating. So keeping all these factors into consideration, we believe in spite of the warning given or tapering down of the expectation by major IT company, we continue to believe that when the actual result come, compared to cyclical, IT will surprise more on the positive side.
Ritu, is this sharp rally, making it hard for you folks as money managers to really hunt for value in this market? Which are the areas that you're looking at closely to find value? And, since we did ask Vijay about IT, we'd be interested to know if that figures in your list.
We are long-term investors. We are very particular and take this very seriously, and we invest at all points of time. We do not hold big cash positions. Having said that, yes, it is a little tough in current environment, but I like to hold a balanced portfolio. My bias remains for good quality, and earning dictates my selections. Steady, sturdy earnings growth. So hence I have a balanced portfolio which has still a mix of IT, pharma kind of sectors, which have this visibility on growth very clearly there. Besides that, I am holding neutral positions in cyclicals, banks, financials, auto, because if we do see a sustenance in the kind of momentum we are seeing in the market, one should not be underweight these sectors. So it is really a balance, and the aspiration is to move with the market and enjoy the upside momentum. I would not be surprised if we see some kind of consolidation if the election results are not as clear, and we might also hence see a pause or a rethink in the FII flows. So I would not in a hurry change to a cyclicals infra kind of a portfolio or a rate sensitive portfolio, but continue to keep it balanced.
Right. Ritu, yesterday in a recent note put out by IMF, they stated that Indian growth could be around 5.5%, 5.4 to be precise, for this calendar year. What range are you working with at your research desk?
I'd like to believe, like I said, that growth has bottomed out. This is a phase of consolidation and we should see improvement. But revival of growth is not a process which happens in a hurry. It is bound to be slow-paced. And I would like to subscribe to the number IMF has put together after a lot of research. And it shows over a percentage improvement in growth, which would be very positive if it plays out over the next year for the economy.
All right, Ritu, before we let you go, tell us the areas which look more than fairly valued and look stretched and may have run ahead of the fundamentals according to you.
I would think it is not a market where one should take sectoral calls, but it's very important to take stock-specific calls and evaluate. It's a bottom-up stock selection which is required at this point in time, because within sectors, even if we took banking for example, and we tried to isolate private and public sector banks, you would find within them there are stocks which have run up a lot and look very rich basis fundamentals, while there are others which still have value in them. So I would strongly urge you not to take sectoral calls, but stock-specific calls, and there is value still remaining in even infrastructure cap goods which have run up, or PSU banks which have run up over the last couple of months.
Ritu and Vijay, both of you, many thanks for taking time out for us then this evening. Let's keep the market opinion going. Saurabh Mukherjee of Ambit Capital